Hello and welcome to financialspreadbet.com. My name is Stu Wisson, and in this article I'm going to be talking about an introduction to financial trading. How many times have you thought of how many of the world's wealthiest people manage to attain such enormous sums of money, but also manage to year on year appear to get wealthier and wealthier? Now, to many, if not all of us, this appears to be a pipe dream, something totally unattainable and out of reach. Most look at the world's wealthy and wrongly assume that they know something secret, that they perhaps are doing something illegal to attain such wealth. For most of the world's wealthy, at least 99%, attain their wealth through good investment, whether that is managed by a broker or by themselves, and 99% of the time, many invest in the financial markets using financial trading. Now, when we utter the words financial trading, it can appear daunting, almost mystical, when we think of traders and yuppies of the 80s, all staring at large screens with data blinking here and there and shouting buy and sell and waving their hands in the air. In as much as a lot of this has now disappeared since the dawn of instant trading through computer software, either in the exchange or now people like you or me sitting at home trading from the comfort of their favorite chair. Now today, it is now more than possible for the average person to learn how to trade, to develop an understanding of the markets. Now, with the dawn of the internet and the brokers allowing easier access to platforms that you can use to trade online, and relative ease now of opening and funding a trading account, enables anyone, providing they have a steady head and heart, willing to lose, be sensible and not bet the farm on their trading ability, it can become possible over time to develop real skills and abilities and learn how to make money from the financial markets. Now, it does go without saying that trading in the financial markets is not a get-rich-quick scheme or an easy way to attain wealth. Trading is not easy. It takes time to learn, skill, and the ability to not let emotion drive what and how you trade. After all, most traders are trading using their own hard-earned money. Now, when you trade, you risk not only the amount you have, but depending on what you are trading, you can incur losses that are far greater than which you placed with your broker. Now, you don't want to get a call from your broker demanding more money, which is known as a margin call. Now, thankfully, these days, the horror stories of people losing their homes and much more are relatively few and far between. Common sense prevails in all methods of investing and trading, whether you're new to trading or an experienced trader. What is equally good these days is that many brokers provide what are called virtual accounts or demo accounts and have a virtual amount of money on a virtual non-real account. Now, you can use this to learn, to develop and get an idea of what is involved in trading online and further enhance and develop your skills and understanding in trading over time. In fact, this is one of the key initial methods we would recommend anyone to do after they have understood the basics of the markets, what they want to trade, the methods of how they're going to trade, and so on. Now, financial trading is such a broad term as it does encompass such an enormous array of markets, products, let alone methods, techniques, skills, timeframes, and more. Financial trading in a nutshell is a term applied to trade a given financial product or item. Looking at this simply, every product in the financial markets has a buyer and a seller. Thankfully, because of the sheer volume of trading that goes on, known as liquidity, finding a buyer or seller for the product that you're buying or selling is almost instant. The volume of trades made per day in the entire financial markets is in the trillions of dollars. For example, in the Forex market alone, this is around $4 trillion per day. And that is just one market within the entire financial markets. And one of the key methods used in financial trading is known as short selling or going short or shorting the market, is making profit from when a derivative, an item traded, is actually going down in value. Now, we will cover this in greater detail in further articles, but essentially it's taking a trading position that allows you to profit from taking a contrary position to someone that thinks it will rise in value. If you go short and the value rises from the point that trade was open, you lose money, and the other person who went long, expecting the market to rise, makes money. However, if the value drops below the point the trade was opened and you make You make money as you shorted the trade, but the trader who went long loses money. Trading is what is known as a zero-sum game. There is always a winner for everyone that is losing. Now, the main markets in financial trading consist of Forex, stocks, and commodities. There are different products that can be used to trade these, such as financial spread betting, for example. As this website grows, we'll cover each of these markets in a great deal of detail, as well as methods and techniques that are established in how to trade them, including our own tutorials, training, and more. Therefore, it could be a very good idea to keep track of this website and bookmark it. For now, let's just briefly cover the main markets and what they consist of. The largest of all the main markets is now the Forex market, known as the foreign exchange or the FX market. This is by far the fastest and most liquid of financial markets. Plus, it's the only market that is traded 24 hours per day all over the world. The Forex market aim is to the exchange of currencies and their value against other world currencies. On a basic level, you are trading currencies yourself when you buy a currency to travel and go on holiday with. When you visit the Bureau de Change outlet, usually within the post office or bank, you are buying one currency in exchange for another, for which the agent will give you a price, which is always fluctuating. When you return from holiday, chances are you will notice that the money you have left, when you sell it back to the agent, you will either get more or less than what you did before. This is simply because of the fluctuations in the FX market for that currency. Now, this is a very basic method that I've used and is not how Forex traders trade, but it does give you an idea of the basics. In the Forex market, the trades are made in what are known as currency pairs. The US dollar and the euro are shown as quoted currency pair together, the EUR/US dollar. And there are many more currency pairs, some of which are more popular amongst traders than others, and we'll cover the Forex market in more detail later. Now, the most commonly known financial market is the stock market. We have all heard of Wall Street and the London Stock Exchange, but what does it all really mean? Well, for the sake of brevity for this article, we'll keep it short, but just like other financial markets, we'll be going into greater detail in other articles with regards to these and other markets. For now, the stock market, otherwise known as the equity markets, is a public physical entity for trading company stock and derivatives, which combined are known as securities and listed and found on the world stock exchanges. The key stock exchanges are the New York Stock Exchange in the US and the London Stock Exchange in London, England, the Paris Bourse in, yes, you guessed it, Paris, France, and Deutsche Börse, Frankfurt Stock Exchange in Germany. There are other exchanges, but these are key stock exchange markets. Each country does have their own stock exchange dealing with public companies within their own locale. Those trading the equity markets are retail investors, you and me, institutional investors, which consists of banks, pension fund managers, and so on, as well as other companies buying stock in either their own company or in others too. Finally, we have the commodity market. This is where the market for raw or what are known as primary products are traded. These can be anything from physical items such as food, metals, and electricity, gas, oil. In fact, the commodity market can be seen as one of the earliest forms of markets. If we imagine that instead of money, actual livestock, grain, and more were traded for other services and so on. This was a primitive commodity market. These days, the market has thankfully matured and sets the price for nearly every commodity that makes anything from the clothes we wear, the fuel we burn, and the food we eat, and the products we buy. All of these are affected by the commodity markets. Once again, we'll be going into greater detail into the commodity markets in another article. So to close, financial trading is an incredibly diverse, exciting, profitable, and wondrous and interesting means of making money. Conversely, it can be stressful, painful, heartbreaking, money-losing nightmare. So being sensible, learning the ropes, and the methods and techniques which we'll go into detail later in this website too, such as technical analysis, which we'll go into detail and teach you about, and also fundamental analysis, will enable you to keep your head out of the clouds, your eye on the goal, and your feet on the ground. More importantly, keep you focused on learning, developing, and growing as a trader, as by doing that and succeeding in that will produce profits for you.